Can I request Sandeep Bhat to speak about the India growth, IPO review?
Wonderful presentation. There is an open house after the presentation. We will take interactive issues from all expert panel members on all the issues. IPO reviews, company analysis, business models, valuations, pre-budget expectations, lots more.
Sandeep, your presentation is up.
Oh, you're already done it. Okay.
You want to do it or you will do it, Sandeep?
Any which way.
Yeah, it's fine. You can do it. That will be comfortable.
Yeah. Thanks again for hearing me out on this subject of the IPOs. And the first thing which comes to mind is
disclaimer.
There's a whole thing where in the secondary market, people are beginning to actually feel that they have missed out on the opportunity to make money by not investing, at a lower level. And when it comes to IPOs, this is the same, psyche which comes in. And are we missing on something? Are we actually investing in the right IPOs? The thing which I just want to highlight, and this is, the experience of the past as well. When public issues, IPOs, come in hordes, and they are not really differentiable in terms of the quality, we are, as capital market analysts, we are a bit scared. And the one which I'm going to actually present here, first of all, the disclosure as always, please read the RHP and the risk factors carefully and consult your stockbroker or your investment advisor before investing. And this is more to do with Stovekraft Limited, which IPO I think is opening up on Monday.
Can you have it as a full slideshow, please?
Yeah. There are very popular brands which are there manufactured by these guys. One is Pigeon. The second, as Manish in fact said, there's Black & Decker, and the third one, which is a little not so known brand, which is Gilma, which produces hobs, chimneys, and glass cooktops. All the ladies will know all this. And they also forayed into the LED lighting segment. Now, I have a feeling that they got into too much too soon, is what my belief is. The next thing which they have is their distribution network spans across 28 states and 5 union territories. Now, that's big. And if that speaks volumes, if the revenues were higher. Now, why are the revenues lower is something which is a question mark. Okay. Again, you will see the sales force is 566 persons only. That might be one of the reasons why the revenues are not so big. There's one advantage which they have. They have 30 acres of land, which is still in Bangalore, which is still vacant. And what they want to do is expand, plus do a backward integration. But there's a caveat in that. If you see the RHP in depth, there's a caveat because some land parcels which are there are under litigation. So you need to be careful in that aspect as well. So that's one of the things. The advantage with this issue, if it really gets subscribed even 1.5 or 2 times, is the fresh issue will bring down the debt, which is approximately 30 crores or 300 million, down to nothing. So that will be the greatest advantage. Now, coming to the weaknesses, and you need to look at the weaknesses and the risk factors in depth. One of the biggest is Black & Decker, if you see abroad, are, more or less are manufacturers and distributors of hard tools. They are in the hard tool segments like, for example, drilling machines and big machines, which they have. They are less of a premium kitchen segment. The second thing which is there is, these brands have come into India, but why are we actually, the ladies, for example, will know again better, because why are we going to the sturdier mixers and grinders? Because the ingredients which we use need that type of a sturdier machines or mixers, which I think Black & Decker doesn't provide. So there's a name, there's a brand, but I'm not too sure of whether that is in demand or not. The second thing which you should look out for in this aspect is Black & Decker has an arrangement with the company for a minimum revenue target. If the revenue target is not met, the Black & Decker licensing will stop. So that is one more aspect which you should look at. Now let's go to the contradictions. Page 124 of the RHP says, we have also engaged a leading management consulting firm to undertake a project to improve our distribution, operations, and productivity of our sales force as part of improving our sales, collect and analyze secondary sales data. Now, I'm not too sure of that, because on page 122, they say, our sales team comprises of 566 employees as of 30th of September 2020 and are constantly monitored and well connected through a Salesforce automation. We have also implemented what is called BizCom. I don't know what BizCom is, but if BizCom is not the same as what they are going in for, what was the use of implementing it in the first place? So it's a sunk cost if it is of that type. The other aspect which you need to actually look at, and this I would say as a private equity player is a very, very important aspect. The company entered into a SPA dated 7th of November 2020 and paid 37.3 million rupees for a 45% stake in a company called Microsun Solar Tech Private Limited. Now, the payment was made even prior to the conditions precedent having been met. I have not heard of any private equity player or any other company putting in the amount when the condition precedents are not met. So the RHP in fact has a clause which says, if this doesn't work out, we might lose the money, which is absolutely surprising. I've already talked of the 30-acre land. Coming to the right-hand side, and I already had a small portion of it on competition. The competition has players like TTK Prestige, Hawkin Cookers, Gandhimati Appliances, Bajaj Electricals, unlisted companies like Preeti Kitchen, and Frank Faber and Sunflame. These are private companies also, and there are others as well, which are much more popular than the other one which had Hobbs, the Gilma product. So will it stand competition is a question. The other thing which comes to mind, and this is even more relevant in today's scenario, is third-party OEM products that are sourced from China. Most of their products were and are coming from China. What happens in a war-like situation? What happens if this supply chain gets stalled? That's a big, big threat. So there are many problems which are there. The biggest of them all, in this scenario, in the COVID times, you have a negative cash flow in business. Please see risks and the point 16 in the risk. Negative cash flows is a very scary thing for me when you are investing in a company, especially in times of COVID. And to add to it, you have contingent liabilities, not only in terms of indirect taxes. There, mind you, there is some provident fund claims which are there. Then there are disputed claims, and more so, there is a committed estimated amount of contracts remaining to be executed on capital account and not provided for as tangible assets, amounting to a staggering 17.7 crores, 177.45 million rupees, which again is huge. So I'm not too sure on their financial, governance and standards. And I'm here highlighting all the more. Mihir had already said this. Point number one, Pigeon brand under litigation. Business may be impacted due to third-party distributors because they don't have a distribution network of their own. Then you have, Mihir again touched on this point, civil, tax, regulatory actions against the company, promoters and the directors. The next one is even more, a question mark there. The managing director and the promoter, Mr. Rajendra Gandhi, might have to step down due to non-filing of annual returns of PAPL in which he is a director. And if you remember, this litigation in point one is with the same company. It's a conflict of interest. We don't know where it is heading. So that's a big risk factor again. There are criminal and civil cases against the MD as well. And I already touched on the onerous clauses of Black & Decker. There's conflict of interest with a group company as well, which is SAEPL, which you can see in point 14 of the risk factors. So the left-hand side, I have actually mentioned the number of the risk factors. So you can go directly into the numbers and have a look. Then I've already touched upon the negative net worth and the negative EPS in the past, and the CCPS issued and considered at fair value. On conversion, the debt equity ratio stands at 0.77 is what they have mentioned. However, a look at the balance sheet shows the net worth is 29.9 million rupees, whereas the debt is actually 300 million rupees. How they have derived at a debt equity ratio of 0.77, I'm not sure. We'll have to ask the merchant bankers. Then they have been hauled up for non-fulfillment of export obligations, which is also a big thing and could be a problem. The next problem, and which is a bigger problem, and I don't know which company this is, they are yet to receive dues from one customer amounting to rupees 150 million rupees, which is 15 crores. Is it the first one? Is it PAPL? We don't know. So please check that out before you analyze further. And then erroneously filing of forms for allotment. This is one more thing. The governance standards and the best practices. There are forms which have been erroneously filed for allotment of shares and transfer of shares. And this is point number 35 of the risk factors, which is staggering. It is mind-boggling to say the least. And then you have the last one, which is there. You have the offer for sale by the promoters as well as the PE investors, and at very, very high valuations. I'm not too sure of how this will go through. I'm not 100% negative because the brands are okay. If the money comes in, possibly there might be a change in the whole scenario. The other aspect is, where will the money go? There are creditors worth 17.25 crores which are there. So apart from the borrowing, apart from not being able to recover debt, they have an additional 17 crores by way of creditors. So it is a little scary from my point of view. I think you need to have a real in-depth deep dive into this company before you really invest. Thanks from my side.
Very good insights on the RHP deep dive. Disclaimer very, very clearly planned and also very well brought out in the presentation. And it is very, very clear. There are two things to be seen very, very specifically. One is on the markets and product side, what the products the company had. It would be interesting to go through the e-commerce site and look at the products of the company and the competitors, the premium products of the competitors and the product of the company which has seeking to serve the bottom of the pyramid market. It is huge market, huge unorganized sector, a few premium players who have a very good long track record, which initially did not create wealth or value for shareholders. Ultimately, it took a long time. Ultimately, their margins and brand positioning in the market improved, and they got good premium valuation. But everybody and anybody cannot just look at the top one or two players and then say it is in that market and claim a high multiple. It is very essential to do the deep dive, RHPs, various factors, the corporates coming out with IPOs, the CEOs and CFOs are always welcome to share their thoughts and the business models. We have seen they are sharing business models with investment bankers. They are sharing business model with anchor investors. They are sharing in business models privately with select investors. On what basis, we don't know. What about regulation? Regulation says everybody should have equal access to information. It should be through the company's website and the investment banker's website. It is very important. Everybody has access to information. Luckily, we have an expert team here with a global experience and excellent professional credentials who do a deep dive and who do an independent analysis based on the information available publicly in the market and in RHP. So wonderful insight. Look at the anchor authorities also who have privileged information. They have access to pricing at a very attractive price. They often see the gray market prices, and they often see the business model and the financial forecast shared by the companies directly and indirectly through investment bankers and select participants. Without sharing that information with the global investors who don't have access to those information, ultimately it's the India growth story, which is succeeding with more and more companies coming with IPOs. Number of investors in IPOs are increasing. There was a time there were 50,000 investors in the IPOs. Today there are over 18 lakh investors in IPO. Last year, the number of investors have grown rapidly. They are making small investments so they can get maximum opportunity. One major development which has happened last week, and we always cover the latest development on IPOs. There is a discussion paper on NBFC shared yesterday by the regulators. do a deep dive into it. We'll be having a detailed discussion soon, but they have mentioned about IPOs. As far as IPOs is concerned, loan against securities, RBI had said funding is available against IPOs to investors at about 20 lakhs per account. What about NBFC? There were NBFCs which were giving tens and hundreds of crores to people who did not have credibility to repay from their own income or from their cash flows. They only repaid from forced selling on listing gains based on whatever gray market prices or estimates of valuation. Will that go? I think it's a very welcome step from regulator. So there is a fair play between the banking system and the NBFC system. Of course, the top 4 or 5 players in the NBFC sector were milking the cream, and they were responsible for 50 times, 100 times, 200 times multiples in the leverage funding category. We all know what happened in IPO, which was selling burgers, right? It was priced at a very low valuation, and there was a big gray market and a premium on listing and short covering by the people who had short sold in the market. There was huge demand in the SLBM category, and there were circuit limits. And then the stock went over 200, then took a deep dive. And now the valuations have come down. Of course, the stocks may be good. It is the markets which needs to be seen. Regulated markets are always good for the India growth story. So very good insights on this IPO review. And there were a few participants who wanted to share their knowledge and experiences. Any questions can be taken up in the open house, results, reviews, pre-budget expectations. The whole expert panel is available. It's really a wonderful IPO review. Thank you very much for the great presentation.